Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. October's National Financial Planning Month. Financial planning, as we know it, includes investing, tax planning, retirement planning, and basically other ways to get your finances in order and create mindful budgets to ensure a safe and secure future. Getting a step ahead of your spendings and finances is beneficial in the long run, and Financial Planning Month is a perfect time to do just that. Joining me at the MarketSite studio, I have Mike Moran, Senior Pension Strategist with Goldman Sachs Asset Management, to discuss the annual Goldman Sachs Asset Management Retirement Survey, which reveals a power financial vortex that is touching all working Americans. It's great to have you with us, Mike. Welcome to Trade Talks.
Thanks for having me here today.
Explain to us what the vortex entails and what's the lesson employers need to provide for employees when you think about your 401ks. What can they do to help?
The financial vortex really refers to those changing or competing financial priorities, as well as life events that oftentimes throw individuals off from planning for retirement. So financial obligations like paying down debt, saving for a child's college education, dealing with an unexpected emergency expense, or perhaps having to leave the workforce for a period of time to care for an elderly parent and leaving that individual without saving, those are all things that can throw retirement off course. So for employers, a key message for them is they can be a great help in helping their employees. Our survey showed that for current workers, they view their employer-sponsored retirement program as their top source of information about how to plan for and save for retirement. So for employers, they need to recognize that their employees are looking for that help. Providing that help from an employer perspective to their employees is no longer a nice to have, it's a need to have because employees are demanding it, and that's especially important in an environment where many more retirees are now retiring without the benefit of a defined benefit pension plan.
When you think about the vortex, does that mean you can't set it and forget it when it comes to your asset allocation, or do you have to set it and then adapt what's happening in life?
Absolutely, and my colleague Chris Cedar recently explored this topic in a recent paper on personalization and goals-based investing. If, for example, I have to leave the workforce for a period of time to care for another family member, and as a result I have to stop saving for retirement during that period of time, once I come back into the workforce, I may need to adjust my plan. I may need to save more. I may need to take on more investment risk in order to reach my financial goals, my retirement goals. On the other hand, maybe an individual's investments performed better than expected over a longer period of time, or maybe there was an unexpected financial windfall. I may want to decide to take down investment risk. So you need to recalibrate your plan along the way.
How can defined contribution plans help participants better navigate the vortex? Is it possible to save for retirement and experience some or all of the vortex, or does this kind of, you have to live it out with the machinations of the market and the economy?
They absolutely can do it. The key is to have a holistic plan that takes into account all of these other financial priorities. So you can't save for retirement in an isolation. You need to set a savings and investment strategy based on the specific circumstances right now. But then you have to recognize that those are going to have to change over time as life happens to us and as other financial priorities pop up. When we look at our survey, current workers indicated that 95% of them felt it was important to have help in planning for and saving for retirement. So it's a good thing that employees and individuals are recognizing they need help. They now need to go out and find that help.
You know what I thought was interesting in the survey? That retirees are also generating income from part-time jobs. Did that surprise you at all?
It's interesting. I think that's really an acknowledgement that when many individuals leave the workforce, they want to maintain some sort of connection to that workforce. When we surveyed retirees and said, what was your biggest concern when you entered retirement? It was leaving behind a steady paycheck. So by maintaining some sort of connection to the workforce, even in a part-time role, even maybe earning less money than they were previously, obviously, since they're part-time instead of full-time, and even though that income may be sort of, volatile, may not be as consistent as it was as a full-time employee, it's a way for them to kind of generate supplemental income to what their other things they're drawing on for retirement. And it's a way to kind of ease that fear of I'm leaving a steady paycheck behind. It's a way to maintain that connection.
Do you also think we're living longer? We have to make our retirement stretch more. And perhaps, 65 looks very different than our parents' generation looked at 65. Maybe they want to work. Maybe they want the camaraderie or they want something to do every day and stay fresh.
It's that psychic benefit, right? And for a lot of people, a lot of them associate very closely their personality with their occupation. So to go from that to nothing is often a very giant leap. And oftenly, it's detrimental to a lot of individuals. They kind of lose part of their identity. So transitioning to some type of part-time work is a way not only to generate supplemental income, but also a way to maintain part of that identity in retirement.
All right, Mike, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.